Hello and welcome to Byju's Exam Prep IAS. Welcome to another session of Indian Economy Essentials. And in today's session, let's try and understand what is the role and the function of SEBI. Now, before I start the discussion, many of you will be asking me this question. Sir, what is the reason? Why have you picked up the article or let's say the topic of SEBI for this video? Was there any current affairs regarding SEBI that is relevant for UPSC? Because every day in the newspaper, one or the other article is related to SEBI. And for those of you who are wondering, sir, what is SEBI? What is the long form of this? The long form is there right in front of your eyes. Please have a look at the slide. Securities and Exchange Board of India. That is the market regulator India. I'll come back to this. Don't worry. The reason why you should be focused on SEBI is very simple. Very recently, SEBI celebrated the 35th Foundation Day. SEBI celebrated the 35th Foundation Day. And during the, let's say, the meeting that took place or the event that took place, SEBI unveiled or basically came out with a new logo. Earlier, this was the logo of SEBI, and this is the new logo of SEBI, which was unveiled at the 35th Foundation Day very recently. And that is a precise reason I want you to understand what is the role of the SEBI, Securities Exchange Board of India. What is the function of SEBI in the domestic market? First and foremost, understand the evolution of SEBI. Because some of you will look at the number 35th Foundation Day and you will start using your CSAT, backtrack, reverse engineer, and you will come to realize that 35th Foundational Day celebrated, or let's say took place in 2023 means you will go back to, let's say, 1988. You'll go back to 1988. But when you read the books will say that SEBI has been established as a statutory body under SEBI Act. And they will write SEBI Act of 1992. Now, some of you will say there is something wrong here. In terms of calculation, the faculty is wrong. Because 35th Foundation Day, if you backtrack, it will take me to 1988. But I read in the newspaper, I read in the books saying that SEBI Act of 1992. What is the issue here? Let me explain this. Follow the discussion carefully. SEBI, to be very precise, was established in 1988. It was established in 1988 through the resolution, executive resolution of the government. The objective of the SEBI when it was established was very simple. The government of India wanted some authority to oversee and regulate the stock market. Because the stock market, or let's say the capital market, over a period of time has become a very important source for various stakeholders. I'll come back to that as well. But there have been certain instances that have taken place historically in case of India. Even though after setting up of SEBI also they have taken place. So government wanted one authority to regulate the stock market. And that's a precise reason. In 1988, it was set up and the Minister of Finance had the ownership of it. But later, I'm pretty sure all of you heard of this, there was a scam which took place which shook the whole Indian financial system. That was Harshad Mehta scam. Harshad Mehta scam. And as a result of the Harshad Mehta scam, from 1988, in 1992, initially through an ordinance, statutory status was provided, and later a bill was introduced, passed in the parliament, it became an act, and that is the reason SEBI Act of 1992 is the one that you generally come across whenever you read about SEBI here. This is how SEBI initially, which was authority set up through the executive resolution of the government, became a statutory authority now. Now, what is the structure of SEBI? What is basically the most important part of the SEBI structure, most important structure? The board of the SEBI consists of 9 members, 1 plus 8. The board of SEBI consists of 1 plus 8. I'll simply break it up. That is 8 number. I'll simply break it into 3 components again. 5 plus 2 plus 1. 5 plus 2 plus 1. The 1 here is the chairman and the 5 are the board members. Again, the board is further divided into whole time members as well as part time members. So this 1 plus 5 are appointed by the union government. The 1 plus 5 are nominated by union government. The 2 are nominated by Union Ministry of Finance, and 1 is nominated by Reserve Bank of India, RBI. This is how you will have the total members, that is 9 members in the SEBI, that is the board has 9 members within the SEBI, and these 9 members are broken down into 2 components, 1 plus 8, and further these 8 are further divided into full-time members as well as part-time members. Specifically, it is section 4 of SEBI Act, section 4 subsection 1. Within that there is a section B, section C, section D, which talks about the appointment, or let's say the composition of SEBI board. Now you have seen the evolution of SEBI, setting up of SEBI. You know what is the structure of SEBI. Now what is the role, what is the power of SEBI? Why this is so important? Now before explaining to you the power, understand one very important point. The capital market is very, very important for the domestic market. The capital market is very important for the domestic market. You should have a very well developed capital market to ensure there is growth in the domestic market. Many of you ask me, sir, how? How the capital market is relevant to the growth in the domestic market? I'll give a very, very simple example here. All of you know that whenever the investments will increase, higher investments generally are associated with growth in the economy. For example, a company will invest money. The company will invest money and purchase, let's say, machinery. Purchasing machinery will always lead to what? Higher production, employment. Higher production means supply would increase. Employment increases means salaries or wages going to the houses will increase. And when both of these, that is, one is affecting the supply, one is affecting the demand. Supply is increasing, demand is increasing, right? In the market, there is a higher supply as well as a higher demand, which contributes to higher growth in the market. So one way through which you can ensure there is a very, very high amount of investment in the market is to ensure that the capital market will function very, very efficiently. And that is where SEBI plays a very, very important role. Because within the capital market, we have a division like this. We have debt market. Best example of a debt market component is a corporate bonds. We have a equity market. That is basically talking about IPO, FPO, etc., etc. The regulator regarding these debt markets as well as equity market is the Securities Exchange Board of India itself. SEBI is a very important regulator here. That's the reason there are multiple regulators in the domestic market. We have RBI, we have SEBI, we have IRDAI, Insurance Regulatory Development Authority of India. We have PFRDA, Pension Fund Regulatory Development Authority of India, etc. One of the very important regulators of the domestic market, specifically in the capital market, it is the Securities and Exchange Board of India. Now, the powers, or let's say the functions of SEBI, you can generally divide under 3 heads. One is protection, second one is development, and the third one is regulation. First one is protection, second one is development, third one is regulation. I have directly written only one term. If you want, sir, how can I reach 250 words with one term? Write protection of the market, development of the market, and regulation of the market, if you do not have sufficient content. But if you have read well, the difficulty in writing these kind of answers will be you are falling short of the words because the word limit is 250. You have too much of content. So let's start. Protection, development, regulation. What do you mean by protection, development, and regulation here? First and foremost, you need to ensure there is a development of the domestic market. Of course, yes, we should ensure that there is a well-developed capital market within the Indian market or within the domestic market in India. The reason is, already I've told you, there is a large demand from the companies, from the borrowers in the domestic market to raise capital, to raise money from issuance of these instruments in the market. But one of the issues that we find is we do not have a very well developed market. And even if you have a developed market, it doesn't necessarily mean all the investors are protected efficiently in the domestic market. For example, I told you Harshad Mehta scam took place. And very recently there have been issues in terms of mutual funds market in case of India. Issues related to front running, issues related to pump and dump scheme, etc. So regarding all of this, who will ensure, right? Who will ensure there's a protection of the investors in the domestic market, and there is also promotion of a development of these markets in the domestic market? It is in fact done by the Securities and Exchange Board of India. For example, sir, protection we understood. How do you say it is promoting development? How do you say it is promoting development? Best example is Reserve Bank of India. Reserve Bank of India promotes right, mutual funds in India. Mutual fund industry regulated, promoted by SEBI. SEBI, not Reserve Bank of India, SEBI, Securities Exchange Board of India promotes mutual fund industries, has implemented a lot of regulations regarding this, has promoted the growth of mutual funds. I'll give you one more example. Have you heard of social stock exchanges? SSEs, social stock exchanges. The SEBI has provided a final approval for both NSE as well as BSE. NSE as well as BSE, National Stock Exchange, Bombay Stock Exchange, right, to set up a separate institute, separate wing within both of them, that is social stock exchange. Right, even the index providers are promoted and will come under the regulation of SEBI now. So I hope you understand the argument here. SEBI through its policies will promote the development of the capital market within the domestic market or within the domestic industry. What about the regulation? Right, SEBI has imposed a lot of regulations on various stakeholders. For example, SEBI has the regulations regarding IPO and FPO, initial public offering, follow-on public offering. Whenever a company wants to go for an IPO or FPO, first and foremost, they need to get the approval from SEBI. What about the issue of dump and pump and dump? What are the issue of pump and dump? It is coming under the regulation of SEBI now. SEBI is conducting investigation against many of these stakeholders, intermediaries, has taken action against many of them. What about the issue of front running, right? That is insider trading. So I hope you understand this. SEBI will not only promote the growth and development of the market within India, it will also, in order to protect the investor interest, in order to protect the interest of the investors, will impose a lot of regulations. And the powers to regulate are given to SEBI under the SEBI Act. Right, so these are the three very important functions of Securities and Exchange Board of India. One is protection, second one is the development, third one is the regulation of the stakeholders or various participants in the market. So these are certain very important points I wanted to discuss regarding Securities and Exchange Board of India. Now, based on this, I've given an MCQ here. Which of the following come under the regulation of SEBI? AIF. Right? AIFs are coming under the regulation of SEBI itself. Right? And many of you will ask me, sir, what is AIF? Alternative Investment Funds. AIFs are basically alternate investment funds, where very high net worth individuals pool in their investments, and through a manager will invest in various securities or in the market. Now many of you will ask me, sir, it is same like mutual fund, but please understand the speciality about AIF is it is open to high net worth individuals, very rich investors, right? Those who have a huge amount of money. That's the reason all the investors are not allowed to enter into AIFs. They will have to meet certain income criteria, investment criteria. So AIFs come under the regulation of SEBI. Merchant bankers, of course, yes, they will come under the regulation of SEBI. Many of you looking at the term banker here, you'll be confused and you might simply say, sir, it will come under RBI because the term banker is used. No, merchant banker will come under the regulation of SEBI. What about stockbrokers? Again under SEBI. Okay, so all the three 1, 2 and 3 come under the regulation. Hence the right option will be option D, 1, 2 and 3. So these are the various things I wanted to discuss with you regarding the evolution of SEBI, powers and functions of SEBI. If you like these initiatives, please hit the like button. Provide your valuable comments in the section below. And if you yet to subscribe to BYJU'S Exam Prep IAS, kindly do it now. Thank you. Have a great day.